do I believe that an economic slowdown would result in a new wall of money? Yes, absolutely. The big thinkers of the world believe that they can control human action with liquidity, and thus far they've been right. The thing that you need to worry, let's do that last. In terms of their ability to raise interest rates, right now they've been able to do it, and they need to do it. In order to lower interest rates later, they need to have them up now, and they will continue to raise interest rates as long as they can get away with it. My nervousness is that we as a society have grown accustomed to free capital. It's a different way of saying that we believe that we're justified in consuming our seed corn now. What artificially low interest rates and debt and deficits really are is a transfer of wealth from young productive people like you to old lethargic people like me. And that's okay with me as long as it's okay with you. But when it ceases to be okay with you, it's going to be problematic. As we raise the interest rates to the extent that a sclerotic economy can't afford higher interest rates, you will see the interest rate fall very rapidly. The scary part, Jake, I'm interested to see it occur, but I'm afraid to be around if it does occur, would be a circumstance where they printed a wall of money and savers went on strike. Suppose they gave a treasury auction and nobody came. Suppose that the US Treasury had to buy the whole issuance itself, which is to say, rather than hoodwinking savers for 65% of the treasury auction, printing 35%, that they had to print 100%. Suppose there was a broad realization among savers that the currency was a fraud. What implication would that have on markets? I hate thinking about it, but making myself think about it is one of the reasons why I want to have ample liquidity, and one of the reasons why I want some of that liquidity to be in gold, which is, after all, not merely a medium of exchange, but also a store of value, not merely a promise to pay, but payment itself. I'm one of those, Jake, that when I ask myself the questions that you answered me, hope, first of all, they don't live long enough to see the answer. But I also really, really, really hope, with regards to my gold holdings, that form of insurance doesn't pay off, because the circumstance where there was a total repudiation of fiat currencies, but where savers really came to understand the fraudulent nature of the US dollar and other fiat currencies, and the fraudulent nature of treasuries, the era that would usher in would be pretty scary.
We're all experiencing a huge amount of inflation right now, although that it's going to get worse. There's not one doubt in my mind, I can't guarantee this, but I'm pretty darn sure that we are at the beginning of a hyperinflationary event. And the only difference between inflation and hyperinflation is the speed of that inflation. The problem is that there's virtually no purchasing power left in the US dollar. Now, and people go, "Oh, you're crazy. I still use that when I go to the store and I buy stuff online, etc." But if you go on the Federal Reserve's website, the FRED, F-R-E-D, and in the search bar, you put in purchasing power of the consumer dollar, what you'll see is that there's officially 3 cents left out of the original dollar's worth of purchasing power, which means it's worse than that. And all of this inflation that we're experiencing, we are losing rapidly whatever little bit of purchasing power is left. And so the bottom line to all of that is that we are at the end phase, the end of this fiat, this government debt-based money. And that is one of the patterns, is very high inflation. Like your viewers may have seen on, the talking heads on CNBC or read in the paper that it's like the 70s or it's like the 80s, and they'll go back, wow, this hasn't happened since 1974. Well, we were shifting at that point from a gold-based currency into a debt-based currency. One of the other repeatable patterns is the war. So if you'd been watching my work, I've been saying that, because wars always accompany these currency regime shifts, because now you're looking over here and then the war can justify this huge spike in that inflation. We also have civil rights movements. The oil, back in the 70s, it was the oil embargo. You indicated that Russia was talking about selling their oil for gold, but they're also talking about selling not just their oil, but possibly all of their largest exports in rubles. So creating like a petrogas ruble, right? Which is what the US did with the petrodollar back in the 70s when we were losing our status as the world reserve currency. So there are what the world has now seen the US do to Russia and the allies as well is cut them out of the global system. So any of the wealth, any of the assets that the government or a lot of the oligarchs in Russia held outside of Russia, they don't have access to it anymore. Because here's a simple fact. If you don't hold it, you don't own it. But everybody's watching that. So that's on a global government scale. But didn't Canada just do the same thing to their citizens that were protesting and they didn't like it? So boom, they just cut them out of the system just like that. And they're still not back into the system. It proves that you better have resources, real money, that is in your possession if you want to weather this financial storm that we're in, because it's not going to be so easy. And some of your viewers may have already noticed that there are greater limitations put on your access to your funds. Maybe you haven't noticed that yet, but go and try and wire over $10,000 or $100,000 or whatever it is. Go and try and take cash out. You're going to discover that it's not really your money. They're going to say, what do you want this for? Why is it your business? It's their business because it's their money. When you make that deposit, you give them that. You loan them that money. So don't find this stuff out too late when you're locked out of the system and you can't access your wealth. Prepare now. Get ready now if you haven't already done so.
In 2008, Hank Paulson reportedly got down on his knees and begged Nancy Pelosi for the bailout, if you remember that, right?
There will be no cash in the ATMs by Wednesday.
No cash in the ATMs, no cash, tanks in the streets. He was worried about credit markets breaking down and then supply chains breaking down after credit markets. Much of Wall Street is sitting there looking at credit markets going, okay, a little bit of strain, but not too bad yet. But the supply chains were broken starting before this thing. You know, but it was hey, the China stuff was broken, right? But there was not really there were problems with the food supply chains, but there were not problems with a capital P with the food supply chain. And now there is. And So I think we're seeing the crisis work in reverse, where this is not anything like the last 40 years anybody's ever seen, and so they're not thinking about it properly, which is you've broken the supply chains first. You're going to have a credit crisis because the supply chains broke first. It's not going to be, we have a credit crisis, we have to stop and paper over before it spills into supply chains. It's going to work the other way. And so I think actually you're seeing nations that are saying we're stopping exports of grains. These are the people that don't have any margin for error. I'm going to get thrown out of office, and that's the happy ending. In some places I will get, killed, literally, if there are food riots, etc. in my country. We're done here. We're not exporting as much. Either they slow exports or they put export taxes on it. They do something to restrain the outflows of grains. And so everybody starts doing this. These are people that are acting with a large margin of error, right? They don't need to day trade and get every last point out of corn. They just, boom, we need to make sure we have it. And so I think this is the leading indicator of this crisis, where as the recognition in credit markets dawns, you're going to have inflation continue to rise. And as you have inflation continue to rise, the supply chains break down, you're going to have this reinforcing mechanism of my fiat currency doesn't buy me what I thought. My fiat inflation, bonds, sell my bonds. I need to. And once that takes place, and I think it's starting to, central banks are going to have to, they're going to have to either stand aside and let this credit crisis evolve. And what's going to be really unique about this, in my view, is that it's, in the West, it's going to look a lot like an emerging market credit crisis, where yields go up even as stocks go down, asset prices go down, unless the central banks come in and cap yields and say, listen, all right, fine, 10-year treasury in the U.S. isn't going over 2.5 or isn't going over 3 or whatever. They will, we're doing QE, we're going to do some sort of yield curve control. And there's already calls out there, it started last week, for some sort of treasury liquidity facility from the Fed. It's not QE, it's a treasury liquidity facility. It's the same thing. Because the treasury market, the deepest, most liquid market in the world, not trading like the deepest, most liquid market in the world. You're already seeing these strains again, similar to what we saw in March of 2020, when the treasury market, after 12 days of an equity downturn, crashed alongside stocks, which had never happened in 40 years. It was a huge, huge warning signal. It's flashing yellow again. And so I think what we're looking at is ultimately this crisis spreading from supply chains into credit markets. And then from there, the central banks, the Fed, are going to be forced to increase liquidity, increase balance sheets into an inflation spike. And that, I think, is going to be sort of the crisis that forces these politicians. First, I think, midterms here, I think the Democrats are going to all get thrown out. Anyone that can get thrown out of office, I think, is going to get thrown out of office at this midterms. And then you're going to bring in a new group of people, and will they get the message of like, hey, inflation's going crazy, what do we do? And Fed's going to go, look, treasury market's not functioning. We have to keep doing this unless you want rates to go up. In which case, okay, it has to come from policy. What's the policy that's going to fix this? All right, somebody call the energy guys. What do we got to do to get gasoline back down from $7? We need to drill more? Okay, let's do that, right? I mean, you get the right group of people in there, they'll be, as a friend of mine says, they'll be drilling in, Thomas Jefferson's nose on Mount Rushmore, right? But until then, it's just the way our political system works. Until there's enough political pain to elicit a response, here we are.